Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Spirit stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a micro-cap company, 287 million market cap. They're trading at $263 a share, and they have 109 million shares outstanding. Spirit Airlines provides airline services. They also offer hotels and rental cars. It serves 93 destinations in 15 countries in the US, Latin America, and the Caribbean. It operates a fleet of 205 Airbus single-aisle aircraft. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. It just gets worse and worse each year. Negative 140 million to negative 350 million to negative 520 million to nearly negative 800 million. Not a good trend. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's a little more steady. The negative is not getting as worse. Negative 470 million to negative 680 million. Revenue is a sales for the company, and that does go up from 3.2 billion to 5.1 billion. It did come down a little bit from 2023 to the trailing 12 months. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 1.1 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $437 million. We divide that by 109 million shares. And we get a calculated stock price of $4. They're trading at $263, so they're trading at a 34% discount. It's a buy according to the model. Do you think it's a buy or sell? Let me know in the comments. Simply Wall Street does not value this stock. There are 7 analysts that price this stock at $243. They say it's overvalued. There are 16 companies in the same industry as Spirit, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a little less than the median in CapEx. This should be red. They have the worst debt to equity ratio. For every dollar of equity, they have $9.10 of debt. They're really leveraged. They have negative 786 million of free cash flow. This should also be red. They rank 14th in market cap, definitely lower than the median average. They have a good price to book. Price to book is stock price over book value per share. We cannot look at their PE or price to free cash flow. They're the best price of sales, 0.1. They generate a ton of revenue relative to their market cap. And their 5-year annual revenue growth rate is 7%, nearly double the median average. Here's their latest income statement. The second quarter of 2024, a little under 1.3 billion of revenue. Last year was a little over 1.4 billion. Passenger revenue is down. Other revenue is up. Their biggest expense is payroll, 418 million. Second biggest is fuel, 407 million. Then they have to pay airports a lot of different fees. Landing fees, 116 million. Rent, 125 million. So total expenses, 1.4 billion, a little higher than last year. Last year they had positive operating income. This year they have an operating loss, a significant loss, 152 million. They spend 54 million of interest on their debt, almost double last year. Pre-tax loss of 189 million. They did pay 3.3 million of taxes. So a net loss of 193 million. Last year, a net loss of 2.3 million. Loss per share, $1.76. Last year, a loss of 2 cents. So to summarize, I have them trading at a 34% discount. I give them a ranking of 2 out of 10. They're not the worst airline, but they're pretty close to the worst. Would I buy them? 1 out of 10. Ratios 3 out of 10 because they have a really good price of sales and a good price to book. Financials 4 out of 10. Even though they have negative free cash flow, their revenue is going up. And I do think they'll become profitable at some point. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.